So, welcome back. This is MJ Crypto, and this is Introduction to Technical Analysis for beginners. If you're actually into crypto trading and you want to scale your knowledge to the next level, watch this video to the very end. I'm going to be covering from 1 to 4, and then 5 and 6 is going to be the part 2 of this series. I don't want it to be too, lengthy, right? So, technical analysis basically starts with support and resistance, right? It basically starts with you knowing how to plot that support and resistance. If you are not able to plot your support and resistance, or what we call key levels, you're going to be having different problems as you scale up your journey into the crypto space or forex, whatever it is you want to do. So now, support and resistance, then we have trend line formation, and of course we have market structure, we have basic chart patterns, we have developing a trading strategy, and of course risk management. Now, without further much ado, let's hop right into the session. Support and resistance. I'm just going to take all of these things off. I'm going to take them off. I'm going to go over to this point here. Let's see what Bitcoin is currently doing. I want us to plot our support and resistance here on Bitcoin, right? So we usually do plot our support and resistance in a very systematic manner. I'm going to be showing you just basically how I do these things. It's very systematic manner. Now, you want to come here and then plot these things. Now, the first thing you want to do is to come over to Trading View. Click on this icon here, bar rectangle, and then we're actually going to be taking support and resistance from the key areas where we have major swing point rejections. Now, if you look at this chart very clearly now, what do you see? At this chart very clearly, this is the weekly time frame. All right, what do you see? You're actually going to be seeing rejection happening around here, isn't it? We'll have another one again somewhere around here. All right, we'll have another one again somewhere around here. Have another one here again. Scaling down, we have our bottom, which is this at 3,300. So basically these are the key levels for BTC. Now, I was able to do this because I'm actually a professional at this, but for you, it is better you use the line chart. Okay, with the line chart, you can see where all these connections are touching each other. All right, now, what are the criteria of a support or resistance? Now, a support, first of all, is an area where you have large demand orders, an area where you have buyers buying into the market, and a resistance is an area where you have sellers selling into the market, right? You already know that. Now, to plot a key level of what we call support and resistance is very simple. We must find out where we have major rallies, either to the upside or to the downside. Now, you can see from here to this point, there was a major rally. It rallied back up again to retest this level. You can see from here down, there was a major rally up to this level. So here is another key level. Let me put this back into our candlesticks so that you can see it very clearly. Now, areas where you have major rejections on your weekly time frame, that is where we usually have our support and resistance. Now, so resistance can flip to become support, and support can flip to become what? resistance. It all depends on the market structure. All right. And we're actually going to be talking about that. Remember, we're talking about that in the third section. So I'm going to make this very briefly. And you can see we have our support and resistance painted here already. There's one more. Let's take this. Let's take this. Although this is not a key level, it's just a minor support and resistance, because we can see clearly here that price reacted from this zone. So we're basically looking at zones where price is going to reverse from. That is why we call them support or resistance or key levels. All right. So yeah, so basically that's it. So the next thing we want to talk about is trend line formation. Now, let me quickly take this off. Just take all of these things off. Now, trend lines are used to connect price movements. Okay? Trend lines are used to connect price movements. You can see that we have a trend line duly formed here. To do that, you just simply go to trading view, click on this second one. You can use this as a trend line. I don't like using trend line because trend lines are majorly not lines but zones as well. Okay, so I would rather want to use the parallel channel, draw my trend line. So have this trend line extended like so. Okay, are you getting me? So we'll have this trend line. Now you can see how price respected it consecutively. You can see price came back, price did something like this. Price came back and had the first touch, we had the second touch here, we had the third touch, and so on and so forth. So what makes your trend line valid is for it to have at least 3 or more touches. It's a line or zone connecting what? Price movement. Remember, that's what I said. And BTC is practically just flying as it seems right now. It's practically flying. And I myself am very, very happy about that. Right? So in basic and clear terms, right? In basic and clear terms, this is what a trend line obviously looks like. This is what a trend line looks like. So let's go over to the daily time frame. Go over to the daily time frame. We'll have different kinds of time frames. We'll have weekly time frame, we'll have the daily time frame. Let's adjust this. Okay, let's adjust this. So we can say here is a fake out. All right, let's adjust this. So price is respecting it. All right, consecutively, price is doing it. Now, if you want to draw your trend line, don't force your trend lines, okay? Trend lines are to show you if price is moving in the bullish direction or if price is moving bearish direction. Let's see Ethereum. Let's see ETH. This is Ethereum. Let's see Ethereum and what exactly Ethereum is doing. Ethereum is doing perfectly well. Let's go to the weekly time frame to see connections that we do have. Although I don't like using trend lines for my analysis though, because all of these things are retail, they are not smart money. And because of learning all these things, you get to understand smart money is. See, we have another trend line here. Okay, trend line, price is connecting through it. Price is touching it, first touch, second touch, third touch. So we can see this is a valid trend line. And peradventure price goes down, you should expect price to come back and touch this trend line again before going back up. All right, so basically this is how you use trend lines to be able to get yourself some good entries into your trade, right? Into your trade, yeah. So that's it for trend line formation. So we want to actually talk about market structure. I want to talk about market structure. I'm going to take my time to explain this, so please just pay detailed attention while I'm explaining this. Now, every market, right, has a structure, just the way we have in our physical market where we buy goods and commodities. You usually find out that there are basic structures governs the market. All right. So we have a bullish structure and we have a bearish structure. Now, a bullish structure is going to look like this. Price will take out highs and price begins to what? Move to the upside, right? This is what a bullish structure would look like. I know you've been wondering right now, how come price is continuously rising? Now, here's the ideology behind the bullish market. When buyers buy from here, they come here and sell, right? Price goes down. They buy again, they come here to sell. Price goes down here. They buy from here, price goes up. They come here to sell, price goes down. Buy from here, price goes up, and so on and so forth. It continues in that particular manner until price does something like this. Then you can now say market is no longer bearish, it's no longer bullish. All right, you can now say the market is no longer what? Bullish, but it is now bearish. Now, don't forget that we have all of these as breaks of structures. I'm going to explain what these are. Pay detailed attention. Taking you on a ride. This is going to be BOS. Here's going to be BOS as well, break of structure. Here's going to be another BOS, break of structure, so on and so forth. Then from this point where this low was taken out, here is going to be our chop, signifying that this is actually what? Change of character. This in the middle. Change of character. Now, the schematic you can see right here indicates what we call higher low and the high. Now, see how price is moving. Makes a high, makes a higher low, makes a higher high, makes a higher low, makes a higher high, makes a higher low, makes a higher high, and then makes a new low. All right, it makes a new low. So I'm going to actually just type all these things. I'm going to type them. I'm going to type them so that you guys can follow up these things very, very easily. So let's say this is our high. Okay. Let's say this is our high. So here will be higher high. So I'll put it as HH. And then here will be higher low. Put it as HL. Here will be higher high. And then here will be higher low. Here will be higher high. Here will be higher low. Here will be another higher high. And then when this higher low becomes broken, then we now have a low. Here is where you now see, okay, the market wants to change direction from a bullish trend to a bearish trend. Right? This is the point where you now get serious and say, okay, think what the market is doing, it's trying to change direction. Okay, that's where you now say, okay, think the market, wants to do its thing, think the market wants to reverse lower and continue to go down. So here will now be a low. Remember we had a high here, here is going to be a low because it is now lower than a higher low. So here will be a low. All right, here is going to be a low. So now the trend is going to continue. So we're now going to have lower lows. We're going to have lower lows. And we're going to have lower highs. Lower what? Highs, because it is lower than this low. So here will be a lower high. Sorry, here will be a lower high. Ah, I missed it. Sorry, here's a lower high. Here's going to be a lower high. Then here will be a lower low. I think I was too much in a hurry. Here will be a lower low. Yeah, there will be a lower low. So here will be a lower high. And a lower low. It is lower than this previous lower low. All right. So lower high, lower low, lower high, lower low, lower high, lower low, lower high, like that. All right. So this is how a bullish trade switches position against a bearish trend. This is how it basically looks like. All right. This is how it basically looks like. So right here, let's see how a bearish move look like. We'll have price doing something like this. Then we'll make a lower high, we'll make a lower low, lower high, lower low, high, and then higher low, higher high, higher low, higher high again. And do you see how price was able to move from a downward trend into a bullish trend? Remember, we have two characters. We have a bullish character and a bearish character. The price will move from a bearish character to a bullish character through a change of character. And that's what I've been explaining. So let me fix all of these things. This is going to be our BOS. It's going to be our BOS. We're going to have another BOS here again. Then here is going to be our change of character. I will edit this, so don't worry. Here's going to be here will be our change of character. Okay, then here will be another break of structure. Now we are bullish. We were bearish before, so now we are what? Bullish. So here will be there's going to be another what? Another break of structure. Now, like I said, this is a low. All right, so this is a low. That's a lower high. lower low. This is a lower high. This is a lower low. And then we formed a break or a change of character. We took out this lower high. Now price is now making a new high, meaning signifying that price wants to go into a new phase, right? So here is going to be a high. Here is a high, and then here will become a higher low. Here is going to become a higher low. Here will become higher high. Here will become a higher low. And here obviously will become a higher high. So you can see how the market begins to move. Now, one valid point you should always take into cognizance is ensure you get a break of structure after a change of character. Okay, that's going to improve your win rate. Once you get a break of structure, okay, it is now confirmed that this particular pattern has switched from bearish to bullish, as you can see here. All right, as you can basically see from here. So basically, this is just a simple schematic of what market structure look like. And yeah, so this is how it usually is. This is how market structure would look like. So next, we're going to actually start talking about basic chart patterns. And I want you to pay detailed attention as we proceed further. Let's go. So let us talk about the basic chart patterns that we can actually see on our charts at every point in time. Now we have what we call bearish reversal patterns. These indicate that price wants to reverse from a bull market into a bear market, right? Now, the first thing you want to know is that we have what we call the double top. We have what we call the double top formation. The double top formation is going to look something like this. It's going to look like this. It's going to look like this right here. This is a double top. Now, what this practically means is that, I'm going to explain the schematic to you, is that price moves from here in an uptrend, it rallies, comes down, and then makes an equal high here. Price could not continue the existing uptrend. So price was stuck here, and then at this resistance, price begins to break structure. You can see the way the structure was broken. Yeah, structure was effectively broken here. Let me just indicate that. You can see the way structure was broken. Now, this is basically a change character. All right, and here is going to be our equal highs. Here is going to be EQL. Let me just put this in caps. EQL. All right, are we good? Yeah, so basically this is a double top formation. We have equal highs. Sometimes we could have something like this. Sometimes we could have price breaking out and causing a fake out here. All right, and then price reversing back to the downside. In fact, as a matter of precision, This is usually more of a better or a higher probability setup. When you see liquidity being taken out and then price break structure down to the downside. So you have a double bottom. You have a double bottom formation formed right there. All right, now it's a reversal pattern from bullish to bearish. It's a bearish reversal pattern. Now you can see this is called a head and shoulders. This is called what? Head and shoulders. This right here. This is called a head and shoulders. Head and shoulders pattern is a reversal pattern. Now, at some point in time, these lows are going to be broken. The dynamics behind this is that as price begins an uptrend, we make equal lows. Price goes back again, could not break this high, and then price eventually begins to fall. So that is what we call head and a shoulder. Is looking more like a typical head and shoulder, isn't it? So price will do this, break structure, to the downside, right? So we're going to have our change of character here. We're going to have our change of character right there. Then price will reverse to the downside. All right, that's basically what price is going to do. So in this scenario as well, we have what we call a rising wedge. This is also a reversal pattern, but it's going to show you how momentum practically leaves the market. Now, momentum is going to leave the market because you can see right here that price does this, make an impulsive move to the upside. I will begin to form a channel, begin to form a channel. But what this is showing us is that as buyers begin to step in from the support levels, which is this, we are seeing commensurable increase in what? Supply. So as buyers are willing to buy, supply is also rapidly increasing. And eventually, the support level will be broken. This last swing point eventually be what? To be taken out. We're going to have something like this. I'm going to have something like this. It's going to break out completely. And then price will practically just retest here, test here, and begin to fall even deeper, right? So basically, this is what a bearish reversal pattern looks like. Now, we have other kinds of reversal patterns. I'm just going to wipe all of these things out. I'm going to wipe all of these guys out. Let's stick around. Okay. Just map out, remove all the drawings. All right, so we're going to talk about bullish reversals now. I want to talk about bullish reversals. Hope you guys are enjoying this video. If you know you're enjoying, please like this video, share it with your friends, colleagues at work, and drop a positive comment in this comment section. Keeps me motivated to, keep dropping amazing tutorials like this. So we did a double bottom before. Now let's do a double. We did a double top before, rather. Let's do a double bottom now. I'm going to show you how double bottom looks like. It is called a W formation. It's going to look like a W. First one looked more like an M. This is going to look like this. Yeah, it's going to look like this now. This is what we call a double bottom. So we call a double bottom, but a higher probability setup will be one that causes a liquidity what? Grab from here. Okay. To be one that causes liquidity grab from there, right? So this would be a better option, and price will do what? Break the support, retest it, and then go over to do its thing. To go over to what? To do its thing. Yeah, this is what price is most likely going to do. So you can see the effect of this. You can see it, price came back, swept liquidity, broke through the support level, retested it, and continued the uptrend. So this is a typical what? Double bottom. This is a typical double what? Double bottom. Now, this is double bottom. First one was double top, right? Now, want to actually see something. The next we're going to do is going to be we're going to talk about inverse head and shoulders. This is one of my favorite patterns. I love this pattern so much. So you're going to start something like this. You're going to see something like this. And then we're going to have a what? A breakout. Now, hey, look at this. Let's look at this. Look at this. This is the support level that was broken. And we had our what? Our retest. Had our what? Had our retest. Now, let me show you what exactly I'm saying. Price was in a downtrend, right? It's a downtrend, moving down. All of a sudden, price starts consolidating around here and eventually forms the both what? Shoulders. This is the shoulder. This is what? The shoulder. This is the shoulder. This is the shoulder of this is the shoulder of this pattern. And then price eventually breaks out, retest the support level, and then boom to the upside. This is an inverse head and shoulder pattern. Inverse head and shoulder pattern. I'll type it right here. Inverse head and shoulder pattern. Now, the next one to talk about, you guys should guess. Falling wedge. We talked about rising wedge before, so now we'll talk about falling what? Falling wedge. Oh yes, we'll talk about falling wedge. Let's see. What do we have here? Booyaka. Let's go. Okay. Now we're gonna have something like this. Okay. We're gonna have something like this. Now, price is gonna what? Stagger inside the wedge. Take a good look. Gonna stagger inside. It's gonna come inside like so. Gonna come inside. It's gonna break structure. Now, at the point where it breaks structure, it's surely going to what? Cause a change of character. And when you see this change of character, right? When you see this change of character, it validates this falling wedge that price wants to what? Move back to the upside, right? Round of applause. So I believe you've actually learned something about this right now, right? So this validates it, and the price will do its thing, come back again, collect more orders, and push to the upside, right? So basically, this is just how these things work. So we've talked about bullish reversals now. So let's talk about continuation patterns. We're going to talk about continuation patterns. I'm going to erase all these things, all these bullshits. They're not bullshit anyway, but they are retail strategies. And as we proceed further, you guys are going to understand what advanced strategies are, because all of these things I'm teaching you, they are all basic retail. Now, so we've understood what reversals are. Let's now try and figure out what continuation patterns look like. Continuation patterns. Continuation patterns, continuation patterns, continuation patterns. So continuation patterns are basically patterns that, you know, um, it shows that a trend is actually going to continue its direction. Okay, so we will have, let's say we have a bullish move like so, and then price begins to do something like this. Price begins to do something like this. Sorry, price begins to do something like this. Then this is actually going to be a continuation pattern. Now, this is called a bullish flag. You guys should pay detailed attention. This thing is very, very important. Price is going to do like this. Breakout. Now, the moment we get a break of structure again, that break of structure must happen. The moment you get a break of structure, you wait for price to do what? Test this level, collect orders, then moves to the upside. So this is going to be a what? Bullish flag, the continuation pattern. There are lots and lots and lots and lots of patterns, but I'm just going to actually just show you. I'll still go back to reversals and show you even more patterns, but these are like the basics, right? These are the basics. So we have, and this goes to be for both bullish and bearish. So let me put this as the bullish flag. So I'm going to say bullish flag pattern, very amazing pattern. Continuation. Now, let's talk about the bearish scenario. You're going to see something like this, an impulsive move to the downside, and then gonna get something of this nature, something like so. And price will do its thing. Price will do its thing, showing you that there are more sellers actively in the market, and price will break down. Now, your target for both patterns is going to be the length of the pole. This is the pole of this flag formation. This is the pole. This is the pole. This is the pole. This is the flag. All right, this is the pole and this is the flag, right? So basically, it's going to be the distance between here to here. The distance of the pole is going to be your target. Now, while the bearish flag displaying itself right in front of us, all right? So this is still the pole. This is the pole, and this is the flag. All right, price has broken down. The target is going to be from here. Let me just show you the target. I don't want to be stingy with any information. I just want to pour it out as it is, right? So the target is going to be this. So we're going to extend this guy to this point. It's always going to be the target. So these are continuation patterns. I like trading continuation patterns because it shows me the direction of the trend already and it's already moving. All right, so basically that's it. No, sorry, price is going to actually retest. There's a support here, don't forget. There's a support level here that is now becoming resistance. All right. Test, break structure, fills, some certain levels right there, and drops to the downside. So this is a continuation pattern. Now, I'm going to wipe this off. I'm going to wipe this off. Now, we're going to talk about, we've talked about flags, Now let's talk about um, let's talk about something else. Let's talk about still doing continuation patterns. Let's talk about pennants. Yeah, let's talk about pennants. Pennants are more like flags, but they have a shorter pullback. They have a shorter pullback. They have a shorter pullback like so, and then price begins to consolidate inside of pennant. Break structure, test, then to the upside. You can see it's very similar to a flag formation. Can you see this? And of course, we also have a bearish scenario. This is a bullish pennant, obviously. Bullish pennant. We have a bearish scenario, obviously. So I'm going to actually just do that right now. Oh, so I have something like this. And then guess what? Price is going to break out to the downside. Oops. The price is going to break out to the downside while this is price. All right, so price is going to break out, retest that level. There's a key level here. Broken. Support became resistance. At that point in time, price is going to do its thing. Come down again. All right, so this is what we call a bearish pennant. So called a bearish pennant. This is good. Good. It's a bearish pennant right here. So there are other forms of continuations. We have as many as we can have. It's going to take these guys out completely. It's going to take them out completely. And let's look at triangles now. Look at triangles. Let's look at triangles. Now, let's look at triangles. Now, the first thing I want to know is that there are different kinds of triangles. Let's accept that first of all. Let's accept that we have different kinds of triangles. The first one to talk about is so-called the ascending triangle. Ascending triangle is going to look something like this. It's going to look like something like this. It's going to look like this. This, and then eventually we'll have a breakout. Now, I want you to observe this very clearly. Can you see something? Can you see that at this point, we're making consecutive highs from the support, while resistance was flat? Resistance was flat and support was increasing, meaning buyers are willing to buy at every retracement. A lot of buyers were stepping in. We had more buyers than more sellers. So eventually the sellers, they gave up, price broke out, tested here again, and then moved back to the upside. All right, so basically, it's an ascending triangle. Now, we also have a descending triangle. We have a lot of patterns. We have a lot of patterns. A descending triangle would look like this. All right, it's going to look like this. Now, it's going to look like this. It's going to look like this. It's going to maintain the same level here. Then price is going to break out fully. Oh, you can see we have a flat support now, and then we have a slanty resistance. We have a slanty resistance showing you that more sellers are coming into the market from this point, this point, this point, and they are willing to crush down price below this support. And when price eventually breaks down, we're going to be having something like this. We'll retest here and then against 4. And price begins to fall. All right, so that's it for this pattern. There are what we call symmetrical triangles. We have different kinds of triangles, but basically these are the key ones for the basics, right? These are the key things you need to know. All right, these are the key things that you need to know. I'm not saying those other strategies or those other chart patterns are not, but a symmetrical triangle gives the less, or rather the least probability setup. Chances of getting a good trade from that setup is very small. So that's why I really don't like to wait it up. But I'm going to show you how it looks like anyway. You're going to have an impulsive move like this. The price will begin to do something like this. All right, price begin to do something like this. Now, we're going to have a move like so. We're going to have a move like so. Trying to get the very perfect picture. In trading, it must not be perfect like this. Okay, I'm just trying to show you how well it will look. In real life, it will not be perfect like this. So this is how a symmetrical triangle looks like. All right, it looks just like this. So price can break out from both sides, can break out from either of both sides, can break out from the bullish side or from the bearish. Now, all we want to be looking out for is where the change of character is happening. All right, it's actually where the change of character is occurring. If the change of character is occurring, change of character is occurring somewhere around here, automatically that means that price wants to go to the upside. But if we're having, let's say, price comes down here, means price wants to go to the upside. But peradventure price doesn't do that. Look at peradventure price doesn't do that. Rather, price breaks through here like this. Means price wants to go to the downside. Am I communicating? You know you're enjoying this session. Just drop a positive comment down below. Right here, let's keep myself motivated. All right, let's keep MG motivated, okay? Let's keep me motivated to keep dropping these kind of amazing videos. Okay, now we've talked about ascending triangles. Let me label them. Talked about ascending triangles. We've talked about descending. Talk about descending triangles. Talked about descending triangles. And then we've now talked about symmetrical. What about symmetrical triangles? Now, these are what they look like. We're going to actually see them on our charts as we proceed. Now, I want to go back to continuations. Now, there's what we call, we have a reversal pattern called, let me just check. I have a reversal pattern called, I have a reversal pattern called an Adam and Eve formation. It sounds very funny, but this is how it looks like. It looks something like this. It's going to look like this, have a sharp move. And then we're going to be seeing a curve taking place. You're going to see a curve like this. You're going to see a curve. Now, this formation usually happens on Bitcoin. What did I say? Usually occurs on Bitcoin. It can happen in any pair though, but it's actually an advanced schematic. Now, when you see a rapid move to the downside, like so, and then a sharp move back up and a curve like this is indicating that there is high momentum coming into the market from the buyer's perspective, not sellers now. The word from the buyers now. This is the what? Key level right there. And then price is going to break out from it and continue. It's going to continue its thing. All right, so basically that's just one formation again that you need to put into deep consideration. You put that into retrospect so that you know what you're doing. All right, so basically that's for this. This is just another what formation. It's a reversal formation. It's a bullish reversal formation. Now, we want to talk about another one again called the rounding bottom. Right? And we forgot to talk about a cup and handle. Now, a cup and handle is both formations. A cup and handle can either be a bullish, can either be a continuation, or it could be a reversal. Now, this is how a cup and handle looks like. Let me show you distinctively how it looks like. You're going to see something like this. No, you're going to see something like this. Let's be very precise about this. You're going to see something like this. Okay. Then you're going to see something like this. All right. So when price breaks out of this formation, like so, pay detailed attention to what I'm doing now. Price breaks out, retests. This is a what? A bullish up and handle. Now, it could also be let me inverse this. Now, we could have this as a bearish cup and handle. You see the way I flipped my chart? We could have this as a bearish cup and handle. When price breaks this support level, retest here, this resistance level now, retest the resistance, and break structure again, then it is a confirmed breakdown that price wants to return to the downside. Right? This is an inverse cup and handle formation. Now we have a lot of them. We have what we call the rounding bottoms, have all of these formations. A rounding bottom is similar to this. It's just a single, let's say price does something like this. And then we're going to have something else that looks like this. We're going to have something else that looks like this. Okay. We're going to have something else that looks like this. So price is going to stagger. This is the move, the impulsive move. Impulsive move. We're going to have price staggering like this. We're going to have price staggering like this. Okay. And then eventually price is going to break out, test support, then fly to the upside, right? So this is the support talking about. The first move that caused the breakdown. When price does this, it's a clear indication that I'm moving to the upside though. Now it could also be a bearish scenario. Let me invert this scale. You see it? You see it? You see, even in this pattern, we also have a head and shoulders. Can you see it? We have a head and so inside of a rounding bottom, we are usually going to be seeing fractal patterns like head and shoulders, inverse head and shoulders, and so on and so forth. We're going to be seeing all of these things practically inside. So the market is actually a fractal. It's a fractal because from a wider perspective, if you zoom out, all right, you're actually going to be seeing the same, you're actually going to have the same perspective when you zoom in. All right, meaning if you see a bearish pattern on a higher time frame like your weekly and so on and so forth, you are most likely going to be seeing the same patterns formed on 4 hours, 1 hour, like so, right? So that's why I said the market is fractal, and these type patterns often the time, they show you basically how these things are being done. Am I making sense at all? I believe I'm making a lot of sense in this video. So yeah, we've understood this. Right now, we're going to go into our charts and try to identify where we see all these patterns playing out in real time. There we go. There we go. There we go. There we go. We'll be seeing all these patterns. They will show and reveal themselves. Okay? They're always going to show and reveal themselves to us. To what? To us. Who blessed? Okay? Can you spot head and shoulders here? Look at the head and shoulders. Head and shoulders is right. At the shoulder level. And then these are the shoulder levels. You can see that have slanty, and then we'll have the baseline that was broken. Baseline that was broken. You see, it's not perfect, but it's head and shoulders. Now, you see when price breaks down from here, like so, begins to fall down, begin to distribute towards the downside, right? That's just a simple analogy of what these things would look like. Look at something else. Amazing, 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 amazing. We have a bullish. Look at this now. We have an ascending triangle here. Anyone we see, we just identify. We have an ascending triangle here. Ascending triangle. Can you see this? You see our price, we tested it, broke through this area, we tested it. It's about moving up again. Now, not only that, too, we also have a bullish, look at this. Look at this. All right. This is a flag, bullish flag that has already been broken. If you can see this video right now, I don't know when it's going to be up live, but you can practically just take this as a trade because we have a bullish flag already presenting itself here. All right, and the price has retested the level. So we're good to go. So we should be targeting the length of this particular move. I'm just going to target the length of this particular move. Now our target should be somewhere around $80. So imagine you're using a 10x leverage on this particular trade. I'm going to keep making profits, and it's very simple. Let me check what this looks like on the oh, this is a very, very massive trade. This is a massive trade. Honestly, this is a massive trade. Price is going to come as high as this point. As high as this point. It's going to come as high as this point. So this is a massive, very massive trade. Right? If you can be patient enough to let this trade run, on spot alone, this should give you about 273%. So on futures with a good leverage, this should be giving you nothing less than 4,000%. All right, it should give you nothing less than 4,000%. So we just imagine you're going in with about $200. You should be thinking of coming out with nothing less than almost $6,000 profit. That's how trading can be. All right. Funny enough, I'm on this trade right now. I gave this as a signal. I'm on this trade currently. Made this video today. I'm on that trade. All right, so we've identified a lot of patterns here. Let's see the ones we can identify again. Let me move to a lower time frame now. Let's go to like 4 hours. 4 hours and see what we can identify from that 4 hours. Let's see. Okay, do you see it is a fractal? The same thing. The first time we did it was a daily time frame. But now we're seeing the same thing. Boom, inverse head and shoulders. You see how I'm using my eyes to gauge all these things? Can you see it? This is called mastery. Master these things so well. Then here's the neck, here's the shoulder. And I'm going to draw the support level somewhere around here. Boom, price breaks through it, retest. Sorry, it's going to be somewhere around here. Price breaks through, retest, and then it flies to the upside. It moves to the upside like so. Right? So basically that's just how it is. And we've identified a lot of patterns. We'll keep identifying them so that you see it in real time. You're going to be seeing them in real time now. Seeing them in real time. Okay. Let's look at this. Let's look at this. This is a bearish flag. Look at the impulsive move. It's a bearish flag. And a lot of you be saying, how does this guy do this thing? This is what you get when you practice almost every day of your life. All right. Now you can see how price broke out of this flag. And if you measure here now, it's definitely going to be the distance. Can you see? Can you see the accuracy? It's going to be the distance. You see, our take profit is somewhere around here. You see why I love continuation patterns? It's already showing you that, oh, price is bearish. Why have a flag already? All of that. So once you see this breakout here now, you already know, okay, yeah, I'm supposed to sell. And you sell from here, put your stop loss somewhere around here. And then price begins to tank towards the downside. So we've seen basically almost all these chart patterns. I don't think we've done double tops. Let's see if I have a rounding bottom here. I see the rounding bottom. I see this. It's a typical rounding bottom. This is what a typical rounding bottom. Then price breaks through key resistance, like I told you guys before. And then going to have stuff like this. See the rally to the upside. You can see the rally to the upside. Basically, that's just how these things work. Still more patterns to be observed. Still more patterns. Trying to look for ah whoa. Let me look for something else. Yeah, let's take a look at this right now. Let's take a quick look at this right now. I want to take a double bottom. Good. I've seen not exactly. Yeah, I've seen a double bottom. See one bottom here. Bottoms out. Then we'll have another bottom at this point. And then price breaks through this level. It didn't even retest because the momentum was very high. Look at the peak candle. Then price just started going up. Started just flying. All right, price started flying upwards. Yeah, so yeah, this is just how these things work. My name is MJ Crypto. It's really been an amazing session with you guys. Don't forget, you can reach me out on Telegram, WhatsApp, and email. Everything is going to be in the description of this video. And I want you to check out my other videos on smart money concepts and how to trade liquidity, how to trade Wyckoff, how to become a better skillful trader that you need to be. All right. So cheers, one love is peace out from here. I will see you on the inside. Merry Christmas. Let's go.